Now we are moving on further with the assets. So within assets, one key component or one of the types of assets that is left to be discussed is financial assets. Uh, what are financial assets? Financial assets are those investments that are into bonds or equity shares or any other kind of financial instruments. So any investments into financial instruments or financial assets are recorded under financial assets. With respect to financial assets, there can be different types of treatment depending on the purpose for which you are making the investment. So sometimes you make the investment for holding it till maturity. For example, if there is a 5-year bond or 10-year bond, I might make an investment to hold it till maturity for 5-year or 10-year, whatever its life is. Or sometimes maybe I buy a bond to sell it at some later date, maybe after 1 year, after 2 year or 3 year, whatever. Or sometimes maybe I am in the business of trading bond, that is buying and selling bonds or buying and selling shares quickly. So there can be different purposes for buying financial assets or for investing into financial assets. And based on the purpose of your investment or based on the purpose of you for you to buy that asset, you record that assets as per accounting standards. So accounting standards हर purpose के लिए different होते हैं. So if you are holding it till maturity, then accounting treatment will be different. If you are holding it for selling it for some later period, then accounting treatment will be different. And if you are buying it for just for trading, then accounting treatment will be different. So previously these assets used to be classified into different types like held to maturity, available for sale, and trading securities. But then IFRS 9 came in and IFRS 9 changed these definitions or changed these names actually. So treatment almost वही है जो पहले होता था, but these names have now changed. Like for example, if you are buying a security and want to hold it till maturity, till its whole life, then you record it at cost on balance sheet and you record any realized gains or losses on income statement, and you do not record any unrealized gains or losses. That used to be the treatment for held to maturity securities. Again now under IFRS 9 they are treated the same way, but this method is known as amortized cost. That is recording it at cost on balance sheet and then taking it through income statement in terms of realized gains and losses. Available for sale securities are those securities that are bought to be sold at some point later, maybe after 1 year, 2 year, that are not expected to be held for their whole life. This was the term that previously used to that IFRS previously used to have, but now this has been changed into another term that is known as FVOCI, that is fair value through other comprehensive income. In AFS, you record asset as at its fair value. You record any realized gains or losses on income statement, and you record any unrealized gains or losses in other comprehensive income. And then the third type, that is trading securities. They are now classified under the head of FVTPL, that is fair value through profit and loss. For these securities, you record them at fair value. You record any realized gains or losses in income statement, and you also record any unrealized gains and losses on income statement. So these are the different treatments of different types of securities. So if there is any company that is investing into financial assets, then you need to check whether the financial assets classification is correct or not. So maybe in order to remove any unrealized gains or losses from the income statement, maybe a company end up treating a trading security as a held to maturity security just to show a better picture of income statement, or maybe just to record or show any realized gains or losses or unrealized gains or losses on the income statement. Maybe company end up treating a held to maturity security as trading security. So company इनकी classifications change कर सकती है just to make a better picture of its financial statement. You as an analyst will need to check whether this treatment is correct or not, whether held to maturity securities are being classified at amortized cost or not, whether AFS are being treated at FVOCI or not, and whether trading securities are being treated at FVTPL or not. So key points to note is the treatment of all these three types of securities, and then secondly, you should also be able to identify whether the company has classified these financial assets as per correct classifications or not. So this is just an introduction or basic idea about financial assets and their recording.